Most people analyze a stock by Googling, is name of stock a good buy? And then buying it anyway. The problem isn't information. It's not having a framework, a repeatable process that asks the same 5 questions in the same order every single time. Today, I'm going to walk you through exactly how I do it. We're using Alphabet as our live example. And I'm going to do this in under 10 minutes. Let's go. Before we start, Alphabet reports earnings today, after the close. So the timing on this one is interesting. Everything you're seeing on screen is pulled from Invyra today, in real time. Here's the 5-step process. Business quality, valuation, value creation, financial health, and trading signal. In that order. Always in that order. Step 1. Is this actually a good business? I start with the IQ score. This is Invyra's composite rating of business quality. It pulls from fundamentals, valuation, and Moat data to give you a single number out of 10. For Alphabet, that's 6.7 out of 10. IQ signal, buy. Now, 6.7 might sound underwhelming for one of the biggest companies in the world, but look at the breakdown. Efficiency is 8.9. Durability is 8.8. Resilience is 8.1. These are elite numbers. They tell me the business generates cash efficiently, the model holds through cycles, and it can absorb shocks. What's pulling the score down? Opportunity, sitting at 3.7. And this is important. A low opportunity score doesn't mean the business is bad. It means the market already knows how good it is. There's limited upside from discovery. The valuation has already priced in a lot. Now, look at the Moat score. Wide, 8.8 out of 10. A wide moat means Alphabet has competitive advantages that are extremely difficult for competitors to replicate. Search engine market share above 90%. YouTube, Android, Google Cloud. These aren't products you build overnight. So step 1 tells me, great business, wide moat, limited surprise factor. On to valuation. Steps 2. Am I paying a fair price? This is where the IV engine comes in. Invyra's valuation models estimate what a stock is fundamentally worth, what we call fair value. For Alphabet, that number is $275.40. The market price right now, $347.15. That's a 26.1% premium. Alphabet is trading more than 26% above what the models say it's worth. Now, is that automatically bad? Not necessarily. Exceptional businesses can sustain premiums because the market is pricing in future growth. Alphabet's forward POE is 23.4. Revenue grew 15.1% last year. The growth outlook is real, but what this tells me is that the margin of safety is gone. If the business executes perfectly, you're probably fine. If anything disappoints, and earnings are today after the close, there's room to fall. The IV engine doesn't tell me what the stock will do. It tells me what the price is relative to value. Right now, it says expensive. Step 3. Does this company actually create wealth, or does it just look like it does? This is the ROIC versus WACC check. ROIC is return on invested capital, how much the company earns on every dollar it puts to work. WACC is the weighted average cost of capital, how much it costs to raise that money. The rule is simple. If ROIC is above WACC, the company is creating value. If ROIC is below WACC, it's destroying it, even if profits look healthy on the surface. For Alphabet, ROIC is 24.2%. WACC is 9.8%. Invyra flags this as creating value, and it's not close. Every dollar Alphabet reinvests generates returns more than double its cost of capital. That's a hallmark of businesses with durable competitive advantages. Net margin is 32.8%. Free cash flow last year, $73.27 billion. These aren't vanity metrics. They're evidence of a machine that actually works. Step 3 confirms what Step 1 suggested. Fundamentally, this is an elite business. But we're not done. Step 4. Can it survive a downturn? I want to know that if the market turns ugly, a rate shock, a recession, whatever, the business can weather it without blowing up. Invyra runs 4 checks on this. Alphabet passes all 4. Strong. 4 out of 4. Debt to equity is 0.14, essentially no leverage. Current ratio is 2.01, more than twice their short-term liabilities covered in liquid assets. Debt to EBITDA is 0.33. Debt servicing at 0.1%. Debt is simply a non-issue for this company. From a financial health perspective, Alphabet is one of the most fortified businesses in the market. This isn't a company that needs perfect conditions to survive. Step 5. Is now the right time? This is where I look at the Prism signal, Invyra's 3-pillar trading indicator that combines trend and momentum, timing signals, and fundamental confluence. For Alphabet right now, hold, high confidence, and this is where it gets interesting. Look at the breakdown. Momentum, bullish. Timing, bullish. Quality, bullish. Confluence, bullish. 4 out of 5 signals are pointing in a positive direction, but direction is bearish. And that's the conflict. What Prism is detecting is a divergence. The underlying conditions are improving, but the price trend hasn't confirmed it yet. Momentum and timing are aligning, but the stock itself is still in a downtrend, trading at $347.15, below its 50-day moving average of $368.65. Williams percent R is at minus 82.9. That's technically oversold territory. The platform flags a potential bounce setup, but with low conviction. MACD, which measures momentum by comparing a fast EMA 12-day to a slow EMA 26-day, is still showing a bearish crossover at minus 0.672. So Prism is saying the pieces are moving into position, but wait for price direction to confirm before acting. That's the signal. So what does the data actually tell us? 5 steps on Invyra give me a complete picture. Alphabet has a wide moat. ROIC crushes WACC. Financial health is ironclad. The business is elite by every fundamental measure, but it's trading 26.1% above fair value. And Prism is detecting a divergence. The underlying signals are improving, but price direction hasn't confirmed. It's saying, wait, that's not a simple answer, it's nuance. And nuance is what separates investors from speculators. With earnings due after the close today, this analysis gives you the full picture before the numbers hit. If you want to run this same 5-step process on any stock, Invyra is free to use right now. You can also create your own portfolio, track every elite investor in the world, and know what they buy and sold. Link in the description. Try it on something you're already watching and see what the data says.